Hi, this is Lisa Milkovich with the Milkovich team, and today is Thursday, Real Estate Topic Thursday. And today we have the great fortune of having one of our preferred lenders, Greg Anderson, with Caliber Home Loans with us. So Greg, thank you so much for joining us today.
Of course, Lisa. It's always a pleasure to chat with you. And, we've been working together for a long time. So hopefully
Yes,
we
I
can bring
think about 15 years now, right? Or
a long time. Been a long time for
we
sure.
were
We've
young
helped a
when we
lot of families
started.
together. Yes.
So today we wanted to just kind of share with everyone what is going on in lending. So I thought I would ask you a few questions that I think are on a lot of people's minds.
Absolutely.
So I think one thing that people always like to know is, what are the interest rates doing?
Right. So interest rates, starting with COVID, the shutdowns and things of the economy, interest rates started to be pushed lower in the March, April, May timeframe. Surprisingly, though, they have only trickled down since that point. So they really have been in a very tight range for the last, say, 6 months.
Okay.
And the reason for that is there is record volume coming through the system. So what happens is companies are all created a little bit differently. So some companies, say like your big banks and credit unions, they can't really tell people that, hey, we don't have enough capacity to take care of your loan. So you're going to have to go somewhere else, because obviously there's banking relationships for credit unions. These are members of their credit union, things like that. And so the way they control their volume is they increase their rates. So
okay.
you will see that sometimes you look online or you reach out to your bank or credit union, and all of a sudden the rates are, artificially higher than everyone else. And so even though you're hearing in the media that rates are going down, rates aren't really going down drastically. What's happening is, as the capacity opens up to do more loans, then some companies are able to bring their rates back, down to where they should be. So that being said, for people that are buying a home with really good credit, conventional loans, and actually FHA, VA loans as well, those rates, those 30-year fixed rates, are below 3%. Everybody's situation is different, but historic low. We've never, ever seen this before in our history.
So let's just recap that. They're below 3% for a 30-year fixed.
Yes, it is.
That is unheard of.
It's unheard of. For most of, I was going to say, for most of our first-time buyers, they're talking to their parents when their parents were first-time buyers in the 80s. They were getting rates with double digits, so 10, 15, 18%.
That is amazing. So if you were to get a 15-year loan, which makes your payment bigger, but you pay it off faster, what are those rates looking like today?
Wow. So those rates are even in kind of the mid to low twos. So generally a rule of thumb is you can take the 30-year fixed rate and you can subtract 0.5%. Okay. Now, again, there's lots of factors that go, that go into this, but that is definitely a good option for some people. Okay. And so we're working with clients. We are talking to them about what is the best term for them, as well as what's the best rate option in that.
Right. So one of the things that I would love for you to explain to our viewers is there a fee for getting a loan? And is that fee attached to the interest rate in any way?
Yeah, so this is one of the things that's very hard to clarify, with the industry. And there's been regulations over the last few years that have been put in place to try to get some transparency. But the reality is you are going to pay for a lower interest rate in some way, whether that be called an origination fee, whether it's called discount points, Some people will call it a broker fee. It just depends on how they term that fee. But if your rate is going to be lower, you're going to pay an extra fee. And really, when we're talking to clients, we're just trying to determine what's the best situation for them. If it costs $5,000 to save $50 a month, that might be great if you're planning on staying in this home and having that loan for 20 or 30 years. But if you're only going to have this home maybe for 5 to 7 years, it might not be the best situation for you.
Okay, yeah, I love how you're so collaborative with your clients to really help them make that best decision on should they pay a fee or shouldn't they? If they
Right.
were not paying a fee today, though, they're still, if their credit is great and, and they qualify, they're likely to get below 3%. Is that
Yes,
correct? That is
absolutely.
just amazing.
It's pretty amazing.
So how long do you think these amazing rates are going to last?
Oh gosh, that's a tough one, right? Because the reason that rates are so low right now is because the Federal Reserve is putting money into mortgage-backed securities, and so they are purchasing the mortgage-backed securities, which creates a market for those. And so as the price of those more, if you have buyers, okay, it's like a stock, so the price goes up, the yield goes down. So the Fed has been buying mortgage-backed securities since the early part of this year, and they're forcing rates down. We're hearing, based off of what is likely to happen with COVID-19 and maybe the vaccine coming middle of next year, we're hearing that these rates could be around for 6 to 12 months right now. It's just really, really hard to project because I don't see rates going drastically lower. There's really not a push for that at this point in time.
Okay.
Then I don't think there's a reason to wait.
Okay.
It's just one of those things where I think there's probably not a huge push to the downside on rates, nor to the upside. And so I just don't think there's a huge benefit in waiting. If you're thinking about buying a home right now, prices I expect to keep going up also. And so it's
Right.
like, now's the right time, right?
So if somebody has a home mortgage already and their rate is in the mid threes or even around 4, would that be a rate that you would recommend they consider refinancing?
I think so. Yeah. I really, when I look at the numbers, there are things online that says, okay, well, you should always save 1% or whatever. Well,
Mhm.
that depends on your loan amount. If you have a $500,000 loan amount and you can save 0.5%, and the numbers just work, right? So like you
Mhm.
said, we collaborate with our clients to figure out where their needs are. Some of the life-changing situations we've been able to help with this year. We had one client, he was able to pay off $80,000 in student loans because his home had gone up so much in value. And it was going to take him about 20 more years to pay off this $80,000 in student loans. We rolled the student loans in, refinanced his current loan. We did it all on a 15-year, and he actually dropped $200 on his overall monthly outflow and took 5 years off of his student loans and his house loan. So
That's amazing.
we're not just looking at saving monthly money. We're looking at other opportunities to get out of debt. A lot of people like where they live, but they really want a new kitchen or they
Right.
want to add another bedroom. And so those are opportunities that we look at. One other thing that I would say that has been an eye opener for me this year is there's a lot of people that are taking this opportunity to move up.
Okay.
And so they're calling me about a refinance because they hear that rates are so low. And we start talking, and the next thing you know, they're selling their house and they're moving up to another house, which, gosh, what a great time to do that with interest rates
Wow.
as they are, right?
That's amazing. That's great. So I know from our perspective, we know the volume is really high right now. We've actually had record sales for the last 4 months in a row now. So what is that doing to closing dates? You know, typically a closing is 30 days, but we know the appraisers are really backlogged because we have not only purchases, but refinances going on. So how has that changed how you're recommending how long the closing date should last? And
Yeah, for purchase loans, we're still pretty flexible on that.
okay,
But, as you know, before COVID, we were closing most of our purchase loans in 3 weeks or so. Right now, we're requesting 4 weeks to, maybe 30 days total,
okay,
um, for most. And so it hasn't changed that much on the purchase side. We prioritize purchases here at Caliber Home Loans, and so that's a big benefit. Because
when you say
know,
prioritize, what does that mean?
so what that means is right now you have 8 to 10 times the normal volume that can go through the mortgage industry, right? So normally in a year you're looking at maybe $2 to $2.5 trillion that goes through the system.
Okay,
And so we're looking at 8 to 10 times the demand right now because of refinancing mainly, but purchases are up as well. And we
okay,
expect purchases. We expect next year to be another big real refinance year and another big real estate transaction, purchases year as well. And so I think one of the things that we're just trying to get everybody to understand is, hey, there's only so many people. Like
right.
appraisers in our state, you have to have a 4-year degree and you have to have 1,000 hours of training. So it's
Wow.
not like somebody can just go get an appraisal license. And so if you now have all that demand and you really have no influx of new appraisers, it can be crazy depending on where you're at. It can be
Okay.
really hard to get an appraisal in 30 days in
Okay.
some areas, not in
Okay.
King County, but in some areas.
Okay. Has the requirements for getting a loan, have they gotten any stricter? Is there anything that we should know about that?
Yeah, so they have, right. So with COVID, and the forbearance, where a lot of people put their payments in forbearance, they weren't making payments.
Okay.
That puts a strain on lenders, and so Fannie Mae and Freddie Mac, followed by FHA, VA, USDA, all those, they've all put additional what we call overlays on loan requirements. So
Okay.
just an example is, right now we have to verify employment right at the end,
Okay.
where we didn't have to before. And obviously that's because people are getting furloughed or they're, losing their jobs. Although I'm going to knock on wood here, we haven't seen that a lot
Okay.
recently. Um, and then also for people who are self-employed, like realtors or
Mhm.
landscapers or construction people, they are scrutinizing the paperwork a little bit more because this
Okay.
year is not going to be normal compared to maybe the last 2 years.
Sure. Sure. Well, would you say that, kind of COVID has had a positive effect on the real estate industry? Kind of surprisingly, right? What are your thoughts on that?
Yeah, it's I just feel very blessed to be in this position. I know a lot of people are hurting and their industries are really, really suffering. And so, but on the real estate side, it has actually, been a positive thing. I think mainly because the Fed recognizes that housing is a great way to spur the economy, because when somebody buys a new home, of course, now they're going to buy appliances, furniture, they're going to go to Home Depot. When rates are really, really low, folks can save, a lot of money monthly. In some cases, we've had people that have saved $1,000 a month on
Amazing.
their payment. And so of course they're going to take that $1,000 and put it back into the economy in other ways. And so we're fortunate to be benefactors of really that economic policy that's pushing those interest rates lower and allowing people to do more right now.
Exactly. I mean, we are blessed in this area to have a lot of the big companies like Amazon and Boeing and Starbucks and medical and just, we are very blessed. And we feel for the industries that are being shut down as well. I mean, I
Yeah,
hope things get back to normal soon.
yes, I think we all want normalcy, right?
We do. Is there anything else you'd like to share with us that would be important for people to know right now around the lending?
Yeah, for sure. I think, I think it's a great time always to be looking at your finances, looking for areas that you can improve. I'm a big believer in helping my clients with their overall financial picture. To
Okay.
me, it's not a refinance or a purchase is not a transaction. It's a vehicle to hopefully get yourself in a position to build wealth or prepare yourself for later on in life, whether that's becoming a landlord and maybe turning your first home into a rental, or if that's just preparing for retirement. And so I would say, if you're talking to me, obviously we're going to have those conversations. If you're talking to another lender, I would definitely look and ask them about opportunities to pay off debts that are out there,
Okay.
opportunities to to free up some monthly cash flow so you can do things like max out your 401k, invest in some other areas. With rates being as low as they are right now, you owe it to yourself to take a look at your financial picture and see if now is the right time to lower your monthly bills, or maybe it's that time to move up and contact the Milkovich team to sell your home and help move up to a different home.
Great. Well, that is such great advice. And just to kind of give everyone kind of a recap of what is going on in the Puget Sound area market, as we've been updating monthly, we are having historical sales. We have a very low amount of inventory and a very high demand. So we are seeing people from the city move to the suburbs, buy houses instead of being in condos. So the condo market in downtown Seattle has softened, and the residential market is flourishing. So we like to say an equitable normal market is when 30% of the inventory sells in the first 30 days. Well, up to 1.5 million, we're seeing that inventory more than 50% sell in the first 30 days. So it is important to work with professional teams like Caliber Home Loans U to get that collaborative counseling on what loan to go with and get the lowest interest rate, and then to work with professional real estate teams like the Milkovich team to actually get you in a home in this very competitive market for actually purchasing. So we
Yeah.
have partnered with a lot of buyers over the years and really have helped a lot of first-time home buyers, move-up buyers. I mean, I think both of our teams, we just really love helping our clients succeed.
Yeah, I think that's the hard part in this market with all of the demand and the short supply is you have to work with people that are going to lay it all on the table to help you get that home, because
Exactly.
you can walk around and make an offer, but if it's not accepted, it's not really, it's just wasted time, right? And so I really appreciate everything that you guys do, and it helps clients be the winning offer. And it's not always about price, right?
It's
We've
not.
a lot,
It's mostly not about price.
right, right. I think just working with that team is great. So I'm happy that we've had this long relationship, and I look forward to many more years.
Thank you. And thank you for sharing your knowledge with us today.
Of course, anytime.
All right. Have a great day.
Bye, Lisa.
Bye.